Hello everyone, welcome to today's Stocks and Crypto TA live stream. Today is February 6th, 2022, just about 10 o'clock p.m. Eastern Standard Time. It's a Sunday night here in the USA. I'm streaming on a different day today. Just quick announcement. So for the next 2 weeks, I'm going to stream on a different day. So this week will be on a Sunday, and the following week will be on a Saturday evening, just due to some events and holidays and schedule here in the USA in the middle of February. So let's go ahead and get started. We still have stock earnings. We're still in stock earnings season, and if you've been following the market, I mean, we had some just incredible technology stock volatility in the market, and stock market earnings is not over. So, there's more companies that we need to look at. So we're going to do 20-minute stocks, 20 minutes crypto, and then maybe 20 minutes of requests or charts, Q&A. We had a couple of those questions this week. So let's go ahead and get started with our indexes first. Dow Jones, DIA, ETF. So what we were talking about last time was this support trend line right here in the blue on the bottom. I drew this here probably 2 months ago, literally 2 months ago. We fell back down to our trend line support, just happened to coincide with the earnings correlation. Then the market decided to bounce up, half in part of earnings and half in part of technical setup. So bounced up to where there's a gap, multiple gaps right here in the chart. All right, so now we're bouncing down from that, or rejecting down from that resistance. So if we take a quick look on the inside, we'll just talk about support and resistance. The two scenarios I'm watching out for, because we do have a death cross on the 4-hour chart, is are we going to, with the next set of earnings, which is basically everybody else, every other companies. For example, we have some health companies, restaurants, oil companies, travel companies, and entertainment companies, etc. So it's just everybody else this week and next week. We have Coca-Cola as well, some consumer discretionary the following week. So what happens with our price is we're looking for, are we going to establish a higher low here somewhere and hold above the support trend line? That's one bullish scenario. The bearish scenario, if half the earnings or something are bad in the stocks, then we could set the lower high and then reject back down below. So the death cross of this EMA, it's a slower indicator, so you can't base all your decisions off that. But on the 4-hour, did we get a trend reversal? Yes, we did, because it went from the downtrend to an uptrend. So now the question is are we going to get uptrend continuation, because the volume has been decreasing? We need some volume to come back to push us back to our all-time high zone. If not, we could consolidate. That's a third scenario, but the most likely scenario is either we're going up or we're going down. It's just how is it going to happen? How and when is it going to happen? So if you're in my free Discord, I already wrote the support and resistances. So it would be, the support would be 347 in this range, 347, 343, kind of in the middle of this price cluster. And then in my Discord, I wrote 338. There's additional ones in the 330s down here, but I'm not going to write that one. All right, so resistance above 353, 355, and 359. These are not random numbers. These are all derived by looking at the price in the white line, or in the green and the red. Okay, we have a gap here as well. So if you're just starting out, because a lot of people are starting out in technical analysis, or watching my stream or in my group on a Discord, is that you just want to be able to first look at the price. Okay, I know I have a lot of drawings on my chart, but if you're starting out, just look at price and volume first. before you do anything. Because when you come into a market, you're trading and analyzing the price. You're trading the price. For example, when you go to a store or when you go to a restaurant, you're trading your money, your cash, for a product or a service. So if I go to McDonald's and I buy a sandwich or a hamburger, I might pay $4 or $5 US, right? So I'm trading my money, $4 or $5 US, for something. The product, the service, in stocks, it's the asset, right? So you have to track the price and the volume as well, but it's price first, okay? So all these tools, all these indicators, it's to help us analyze the price, okay? That's all we do on technical analysis, price and volume analysis, trends, patterns, that's it. Okay, next, speed things up. SPY, S&P 500. So it's kind of a similar issue. You can see here, we hit our target on the top side. I'm going to erase some of these lines here. This is still support down here. And if you're wondering where's this from? This is my idea that I posted on TradingView 2 months ago, that we were possibly triple topping here, double topping, triple topping here, and that we're going to go down. I talked about this 2 months ago, over 60 days ago. Okay, so this is how you know technical analysis works, if we know how to use it. So the same question applies. Okay, we're still in the middle of earnings season. Our downtrend has based out, and this could be a higher uptrend reversal. We might be staring at it right now. This happened on oil too. We'll look at this chart. Right, it went up, down, but then it held the support level. Okay, so how do I know we're going to go into downtrend? We're going to lose this support level of 430. If we lose that over time, then it's a downtrend continuation. But right now, it's yellow flag to me. If it's high or low, if it's going to hold above, anywhere above 430, and then break the resistance of 458, then we go into an uptrend reversal to the upside this way. So then it becomes a matter of support or resistance. You could draw it. Support 443 on this chart. Let me use a not pink color. Let me use white. Let me use gray. Easier on the eyes. 440, 434, 427, all there. The resistance on the upside, I'll be looking for this break tomorrow, 451, 458, 466, and 471. So tomorrow, this base, right here at this base, 445, if we hold above that, we'll be in good shape. And keep in mind, I'm a longer term trader. I'm a swing trader on the hourly and the 4 hours. So, I'm not looking to scalp 0.5% for me. That's not my target goal. So that's why you never really see me on shorter term time frames on this stream. I'm not a day trader. I'm a swing trader and investor. So very quickly, NASDAQ, there's a lot of story about NASDAQ, tech stocks. But even if we did not know anything about earnings, there's still a use case for technical analysis. So 60 days ago, I was talking about this is downtrending, this blue, these two lines here, it's consolidating, but it's still downtrending. And once we lost the support, is game over. Down to where? A previous level of support. Here and here, or here. You could just draw it. See, technical analysis works. You know how to use it. But the problem I see with people is they're zoomed in on like a 5-minute chart and just looking at one candle like this. And that's not really going to help you that much. You need to get your support and resistances up, okay? So just very quickly, 3 scenarios that can happen is we have uptrend reversal, scenario 1. Number 2 is consolidation until earnings is over. Number 3 is if there's a clear bear break, loss of support, then we go downside. Okay, you can also draw trend lines above. We could see here on this particular diagonal trend line, that's the resistance roof, I like to call it. And there's also one here, but that's kind of penetrating a little bit too much on the price if you want to keep the chart clean. There's also this bottom side support trend line. So you could see the clear two targets. If we break above the resistance here at 369, that's going to be a clear sign of a breakout. If we fall below, say below 333, that's going to be your support zone. So this is how we use TA charts to get way ahead of everybody else who's not using technical analysis. These two numbers here will be our guiding North Star in the trading for this week. Okay, so the numbers that I'm saying, it's not insignificant. These numbers are not a joke right here, right? Charts are not a joke. It works if you know how to use it. Why? Because if somebody drew this particular support level, they played the bounce off that easy. That's an easy trade. With some other indicators just for some quick confirmation, but basically that's textbook trading. Okay, let's move on. So now we're going to do some of these indexes here. Just take a quick glance of IWM. So IWM is a different story. What I was talking to one of my partners, my colleagues, is wait a second, there's a potential upside down head and shoulders on IWM. Russell 2000 ETF. So I am not ignoring this. I am keeping a very close eye on this in the stock market this week, because if it's going to be our bottom reversal signal, 6% to the upside from the breakout would be a nice trade. 217. So risk to reward. If I happen to participate in the right shoulder, it would be about 2-to-1 risk reward to risk. Risking 3% on a small position to try to get 6% capital, maybe even 12% profit if it goes very extreme bull. But I'm seeing this on some of the tech stocks starting to have upside down head and shoulders on the 4-hour and the daily. So I don't ignore that. You know what I mean? I'm calling on the stream right here. If it breaks bull above the neckline, that'd be very good. Our oscillators are definitely in the zone. The only problem is the death cross on the daily EMA. So you want to watch out for that. Okay. Just because we have this, patterns, nothing works 100% of the time in technical analysis. So whatever you see me doing, or anybody doing on TradingView, is probably 20, 30, maybe even 40% of the time, traders are losing. 60, 70% of the time, they might be winning if they're being disciplined with their strategies and their risk management. Okay, so I can't say stuff for all people on TradingView, but those are the general statistics. Okay, I'm not pointing anybody out, but those are general statistics. You could look those up on Google and YouTube. It's out there. All right, so I just want to point that out. So we're still volatile. We'll do Bitcoin in 20 minutes from now, or 10 minutes. Scoot down here to gold. Just take a look at some of my commodities, our metals and commodities, before doing some stocks. So it's very choppy. Okay, if you just look at the price, it's very choppy on gold, but it's still maintaining an uptrend here. And this is what we try to see, right? It's essentially equilibrium, meaning it's tightening in this blue. So long term, if we measure it, 3% either way, 3% to the top side will be 1906 target, 3% to downside would be about 1746 area. So I'll mark these two. The good thing is gold, spot gold is holding the bottom support trend line, and we just bounced off of it. Very good. If the price ever does this and pulls back down, that would be not good. Okay, silver. Moving on to silver, very similar, not quite the same, but similar, is you have this equilibrium. So the silver just right here, maybe we are going to see silver bounce to $24. If someone's going to try to trade this, that would be relatively textbook trade, 3% downside risk, 6% target to the upside. Might have to wait 2 weeks for that. Very simple, right? This, once you get good at support, resistance, and then you learn some of the other tools and some indicators, then that's the basic technical analysis skill set. Basic. It sounds easy, but it's not, though, because when you multiply this by 500 assets, then it gets more complicated. But let's look at oil. That's kind of in the news these days. We had a OPEC JMMC meeting last week about oil and gas. And we have some of these oil and gas companies reporting this week as well, like BP and Valvoline, etc. So, what's going on here with oil? Well, this is what I'm talking about. I was talking to my colleague about this yesterday. Is you could see the price if you just look at this price right here. It looks exactly like the Nasdaq in this blue circle, right? You understand what I'm saying? If I go back to Nasdaq, where's the Nasdaq right now in the price? It downtrended, and it looks. If we take the snapshot of this, I'm on Nasdaq chart in the blue circle, and we go to oil, it looks exactly like that blue circle. Okay, so this is how in TA you start to see patterns occurring. This is how I'm thinking that, okay, if it's going to be a higher low uptrend reversal, we need to see this exact pattern play out right here in the arrow. Okay, because we downtrended, they crashed, found a support, bounced up. Now it's going to consolidate, pull back down, hold the support, and then make an uptrend bounce. And then you see all the day traders, all the news, all social media flipping out about stocks, right? But we're getting ahead of this potential scenario 30 days out. Okay, this is how, as a trader and investor, you have a higher chance of winning, right? You start recognizing these patterns. Like, wait a second. Downtrend, okay, bounce, pull back, okay. So then I want to see that support level hold here for NASDAQ, S&P, and Dow Jones as well. Same thing with Bitcoin as well. Bitcoin's kind of already here in the price. We'll look at that later. But oil already had its extended uptrend to the upside, and some of these indicators are already saying, okay, it might get a little bit in the exhaustion zone up here. The weekly uptrend for US oil still trying to seek out its higher high on a weekly chart. So okay, it might not be over for oil, but in the shorter term time frames, maybe 15-minute, actually have 1 hour and medium term time frames, 1 hour, 4 hour, looks like it's wanting to pull back already. Shorter term time frames, Asian markets open right now, they're already trading this 5-minute 15. Okay, we might hit a little bit of this oversold, but the point I'm trying to make is on the daily, all right, we're already seeing a little bit of signs of topping out near the resistance zone on oil. Such an extended move. I mean, somebody could Elliott wave this and say we're in the fifth wave here. So somewhere up here, maybe somewhere below $70, it might top out oil and pull back down. So if I'm trying to get ahead of this and plan for my next trade, prepare for my next trade is, well, if I'm going to short oil, then maybe, okay, maybe I might do it somewhere in the upper band here. Okay, let me just bring up a Bollinger Band. I want to see if anything's poking out or not. Let me just see. Yeah, this one is a little bit, but it can keep riding that up. So it's just kind of in the zone up here, right? If it starts to roll over, I might take a US oil short to the downside, close it somewhere around here, and then initiate my long. So that's just educational, okay? I'm not telling anybody what to do, but it just looks like something is going to happen there in those zones if I just chart it out very easily. It's such an extended move, but the point is I'm not going to initiate the short until it's way up here somewhere. It's too close to support right now. It's just literally right here in the support level. So I want this thing to blast off, and there's going to be some blow off top. It looks like the pattern. That's what it feels like. That's what it looks like on the chart. I've seen this happen before. If it pulls back down, then I might try to initiate long at 61.58 or 55.55, somewhere there, or if it comes back to 51. This is how you prepare. Because this, I literally called this on stream saying this could be our higher low on oil and it could bounce up all the way to the 60s, and that's exactly what happened. But as a trader investor, people have to realize I said that 2 months ago, right? So this is swing trading investing that we're doing here. We're not trying to scalp the 1 minute chart. Okay. All right. Let's go to UNG. Okay, UNG also, okay, this is a very messy chart. But UNG also is still, how this is familiar to me, this feels like crypto, okay? Because UNG, US Natural Gas Fund ETF, is basically like crypto. It's $15, $16. It used to be $4 a long time ago. Excuse me, $8. There's a different asset. I think it's Natty Gas, Nat Gas USD, yeah, $4. But this one bottomed out around $9. And again, you have the downtrend basing, and it's still turned into a uptrend pattern, just very ugly looking, but it's still there. If you put it in white, see it. High, low, boom. So it's pulling back. It's trying to, anything above $13, it's still a higher low. So this thing can pull back significantly before. Not sure it'll go to 22, but there's going to be a higher low somewhere here. So how am I going to prepare for that? Draw my trend line, and then there's some obvious targets. Obvious. Somewhere in the $14 range. It's a support level here, 14 range. Somewhere in there. I'm trying to initiate that. That could be confirmed with oscillators as well, such as RSI and MACD. But it's not, the 4-hour and daily is not oversold like it used to be back in December before we got the launch pad lift off to the upside. Now I'm just talking about little trades here. 1 hour. Looks like it might bounce to the 1 hour. Someone's trying to play this. So again, continuation, possibly bounce off. If it's going to break out, then you'll see it go to the upside. If not, it'll reject down. These patterns happen on a weekly and monthly basis. These patterns also applies to crypto, right? So it's not like technical analysis is separate from crypto. It applies to everything. All right, I went kind of long. Let's go here. That was the educational segment. So let's just look at a couple of the stocks that are reporting earnings, and then we'll move on to crypto. So first off, we have Peloton. That's a big one that's happening on Tuesday. Should be PTON. PTON. Okay, so they had some issues with their company, and so really unfortunate what's happening, and sad to hear what happened with their company, the negative things with the treadmills. But the company is still reporting earnings. So why are people paying attention to this? Is there is a very significant gap resistance to the upside. If Peloton has good earnings, you might see a huge bounce. Maybe not 50%. I'm kind of exaggerating that, but if you could already see here, this is what I'm talking about. On a lot of these tech stocks, just like Russell 2000, I was doing a lot of research this weekend. You find these upside down head and shoulders. It already got closed out on Friday, so people were on this stock closing out before the earnings. But this is here, okay? So this was a trade setup that 18, 19%, it hit that target in 1 day. 90% in 1 day, that's day trader's dream right there, right? But on the daily, if we zoom out, is, well, okay, it's still upside down head and shoulders, triple bottom here. So if it has good earnings, this thing might pop up to the upside. That's why people are kind of excited about Peloton right now. These setups are building. The targets are there. It's already started to go. So I'm not saying buy this. I'm just saying just watch it for the earnings the day or two after if you're interested in Peloton at all. 15-minute, this thing might pull back significantly. So day trading this as a long is not really an option to do it right now. But, that's just one potential earnings play that people are kind of paying attention to right now. Okay, next, another big one, Pfizer. Pfizer, huge company. All right, let me erase this. Huge company. There is momentum building on this daily, but let's get some targets up here. As we all know, Pfizer is one of the vaccine options available in the world right now. So Pfizer, big deal. Vaccines, okay? If they announce anything good, you might see a little pop up. But I'm looking at 2 years chart, and we could draw this trend line here. Sometimes it doesn't connect, so we'll draw another one. All right, what I'm concerned though about Pfizer is there is a little bit of what I call a dirty head and shoulders, not a perfect one. But if they have negative earnings or something bad happens on the conference call and the announcement, then you could see where the downside target is. This huge downside target, 15% to the downside, will bring us right down to 43.03, what happens to be a perfect Fibonacci level and a trend line level. So that's a triple target. I'm going to triple star that. $43 Pfizer would be a significant support because you see it's holding support, support, support. If it falls down, that's going to be the next one, the fourth one. That would be a great long spot, educational wise. This is what we're looking for in the charts. This is how you get ahead of everybody else in the market. That's how you get ahead. So how do I know this? Is some swing traders, okay, people are shorting the top of here. So obviously if anything bad happens, they're going to short the top of this one down. Okay, that's how we use TA. How many lines did I draw? Like 4 lines. And we're able to understand, get a grasp on the TA charts of a company in 2 minutes. All right, so just want to get those targets out. There is momentum building though, so on the 1 hour, 4 hours, maybe on our 4 hour chart, might be a little more clear. This in itself, they're playing off the support level. So $50 is kind of that big price to watch out for on Pfizer. If it breaks above 55, it's different because it's in a short-term downtrend right here. So if this is just copying the index of S&P. So if this breaks out, then the head and shoulders pattern is canceled. Okay, next. Let's do Chipotle. You know, in my opinion, an overpriced company. Chipotle has to do a stock split because a $1,483 spot price for a Chipotle restaurant is very large price. Okay, Chipotle should be like $14.83 if they need to do a stock split like that, because people don't want to buy a $1,483 restaurant company. Okay, so just saying. All right, if you look at Chipotle though, you could clearly see it's in a downtrend. It has been in a downtrend, and what I'm watching out for this is you could see here on the left side, September 2020, is their support level. So it did touch the support level and just bounce off of it. We have the trend line resistance on the top side. So one could say, wait a second, isn't this a descending triangle? Then yes, it could be on a daily. So Chipotle 1334 is the big support level on the downside. If we lose 1334 after earnings, you might see it go all the way down to 1,000 or something like that. Oh, thank you so much, Taylor. Thank you so much for the 200 coins. Really appreciate you watching and donating and joining. Really appreciate it. If you have a request or question, just go ahead and ask. Because a lot of streamers, basically if you donate, you could ask for one request or one question, and I'll do it right away, right after the chart. So please go ahead, Taylor. If you want me to analyze some charts, just let me know. For the people who donate, the rest of the question we'll do at the end. Okay, we'll look at Tesla. So just very quickly on Chipotle, just want to watch for these two downside, 1187, like a 1086, and then top side resistance 1619, 1769. But we just want to be careful on earnings because, you know, the charts matter less. It's less important in times of earnings season. Okay. Thank you so much, Trendline boys. Thank you. Wow, thank you so much, Boss Hog One. Really appreciate it. Wow. So, so Boss Hog One, if you have a request or a question, I'll also look at it. Okay, so let's do these right away. Tesla. Okay, so we had our 618 bounce, but let me erase this so we could look at a clean chart. Let me actually time this. All right, so from 2021 to now, we Fibonacci bottom to top. We get easy support levels. Okay. The trend line back here was lost. So now that acts as like a resistance, this yellow diagonal. So I'm going to leave that there. Now we have a top side resistance. Okay, so you can kind of see the triangle, what's happening. Tesla, though, this could be a dirty upside down head and shoulders. Okay, don't quote me on this, but it could be dirty. Right, the neckline 938. So we'll look at a bullish case scenario here. Could be 12% to the upside if things go really well for Tesla. 1048 would be our our top side target. But if it fails, you could see that the yellow diagonal line, the circle right here, could be our resistance zone. It's still technically in a downtrend, so our lower low would be somewhere maybe in the upper 800s. If it's really bad, 750, because you can connect the line down here and see that a very steep little intermediate formation is here on Tesla. So it's tricky because you could see the psychology in the market play out on charts. Is it's gonna start downtrending, but then like Russell 2000 is, wait a second, tech earnings are over. If this week and next week earnings are good, you could see some additional upside. Okay, but we got to pop on some indicators. Okay, Bollinger Band is still in the middle here. Tesla's hanging on. It's not death cross like some of these other companies. We do have MACD bullish momentum on the daily. It's not quite oversold, super oversold on the RSI. Might have to look intraday for some clues here, but our 4-hour has a clear, the 4-hour has a clear upside down head and shoulders here, okay? The 4 hours right here. So it's sort of like what happened on cryptos this past week. I would watch this very carefully. The 14%, that's a lot. If this happens, I might even long Tesla myself, or if this is going to happen. I'm talking about this right here. You have the neckline right here. We don't get too excited about it though. 7% downside, which is quite a bit, but the 14% target is there. So it could be like a 12% to the upside, 6% to downside. It might get stopped out at 6%, but just want to watch out for that. Yes, it is death crossed in the short term, but again, if this is our lower low, if we hit it, we should make a lower high bounce on Tesla. So that's what the charts are looking at. But again, earnings can cancel all of this. Okay, so there's just one scenario. So just in case you want to look at downside, is if this doesn't happen in the next 1 or 2 weeks and it rejects down like this, it just pop up and fails, then you could see 800 would be that next target, 800 and 873. Okay, so I would watch for if it's going to break out and go up. If it's not, if it's going to be weak, rejects off this, where's this, 990? If it rejects under 990 and goes down and starts pulling down hard, then there might be a short or put option opportunity there. Okay, but this is kind of tricky. It's tricky because the TA is saying, okay, more than 50% chance this thing might go up, but there's other things going on in the world that could pull us down. Okay, that's why we have stop loss and reward to risk, and manage that capital so we're not going to get blown up and lose all our money in one trade. Okay, Taylor, so I hope that it helps you with the potential. This is a very, very interesting pattern, though. I would not ignore that. Just look at really quick, 5-minute, 15-minute. Yes, it's baby up cross, like I like to say. But on every single time frame, you could see the pattern. It's just there. So guaranteed, or not guaranteed, but very high chance everyone else who uses charts is looking at the same exact pattern that we're talking about right now. So please be careful as well. Okay. Hope that answered your question. And that was Tesla. Okay, great, Taylor. Thank you. So Trendline Boys has an interesting question. Any opinion on the 1-year, 2-year, 3-year Treasury yields? And do I know of any relationship it has to the overall market or certain sectors? Okay, so yes, Treasury yields do have a relationship and correlation on the overall market. Okay, but I would say though, because there's on TradingView at least, there aren't a ton of Treasury. There's TLT, that's like the easy one you can find. If you hunt for it, there's these other ones, right? But you can start, TLT is kind of the big, it's a 20-year, so it's very powerful. But you can see here is that there are some correlations here in TLT. But if you want some additional, how should I say this? If you want some additional tickers that might show you some correlation, there are other ones besides the Treasury bonds. Okay, but TLT is one. Some of these other ones, like the smaller ETF, you can look at Treasury Bond Futures right here, ZB. So ZB also helps. Okay. And I'll just list it off first instead of explaining all of them. So TLT, ZB, TNX. This is the 10-year Treasury. This one, the SHI, the 1 to 3 year Treasury Bond ETF. Okay. Sometimes, yeah, that one actually not SHI. I don't want to confuse people. So sometimes SHI can help, but the longer term ones are better as well. Okay, so something else that might help you more than the Treasury bonds is the VIX. Okay, the VIX, because volatility index. So the VIX, like in 2020, right, started basing. It starts basing like that, you might have liftoff in the market. I mean, this is crash. So VIX is sometimes inverse correlated with the S&P 500. Same thing with why we started crashing right now. It's like, wait a second. I drew this to the yellow lines here. Support right here, right? Support. So VIX is one you might want to keep an eye on as well. But I would not really recommend saying like, hey, wait a second. You know, just because TLT or ZB futures or TNX is doing something that I have to do the X or Y opposite in the market, right? I wouldn't do it that it's not 100% correlated like that. Okay, but honestly though, instead of if you're trying to trade treasury yields, it's a different story. But if you're trying to analyze stuff, like maybe just analyze the sector ETFs. That might help you get a better grasp on the market than just analyzing treasury bonds. So for example, what am I talking about? Sector ETFs right here. Okay, there's 10 or 11 that people like to look at. And so this is really good to just take a look at just really fast. XLF, what is it? Financial sector, right? You can see it kind of uptrend and basing. XLE as well. A little too high, right? You get a feel, you get to see what's going on in the market. XLE is too high, just like oil. Utilities, kind of just hanging on here on the downside. It's almost like a silver play. XLI, industrial, is definitely consolidating in a longer term. I don't know what happened to this chart. Sometimes, just a side note, sometimes TradingView, the charts get a little bit, they move a little bit. So just pointing that out is you want to save your work and check it from time to time. It should have been like that. Okay, XLV, healthcare, right? All these charts don't look the same. They look different. So this is what I'm saying is if you're trying to get a lock on sectors, you could take a top-down approach. You could look at the Dow Jones, S&P, NASDAQ, and then inside of that, there are these sectors. And then inside of here is like what financial companies are interested in, what energy. Then that's how the professionals do it, right? So I would recommend that. Treasury bonds are good. I know people like to trade it. But if you're looking for correlation, there are stronger correlations than other assets. Okay, trendline boys, hopefully that answers your question. The general request I'll do at the end. Thanks so much, Boss Hog, for the donation as well. Okay, so we'll just finish up here. Let's see, Disney. Let's do Disney, Coca-Cola, and AstraZeneca just really fast. Disney. Okay, so Disney lost this trend line. Okay, did it hit our negative 24% target? It basically did. Okay, so this triangle, I'm going to erase it because it's over now. Maybe what I'll keep is the upper trend line on the top side. But very steep trend line here on the downside. I'm sure some people would draw it like this as well. But very, very steep. So we have our 618 as well. Level here at 125. Okay, so uptrend to consolidation to downtrend. So if it hits 126 on bad earnings or whatever, because I'm not going to predict earnings, but I did see a headline, news headline saying that at least for certain Asia countries, that they're struggling to keep the subscribers to Disney Plus. So I'm wondering, is Disney Plus going to have like a Netflix situation? We're going to see. Curious to see how that plays out with the number of subscribers and the content and stuff like that. In America, it's a different story because there's shows like Star Wars shows, or there's like Disney shows, Marvel shows that people enjoy it. It's just globally though, is not everybody's into that, right? So just kind of want to watch out. And then also Disney theme parks and stuff, because COVID, people might not be going to that as much. So they also, Bob Iger last year, stepped out from the company from CEO position. So it's different now. It's way different. So with those in mind, our support level 125, our 117, and our 108 would be our downside target. Upside target 150, 157, 167. It's kind of ugly looking. It's not clean looking like this uptrend here off the pandemic lows. Just faded down for a while, and then bad earnings, right? So you just want to watch out for this. If it does one more leg down, then once it bottoms out, okay, there is some definite people want this thing to go up on the charts. It's what it looks like. So just watch out for that. The earnings. Okay, last one. And why am I doing these? Is because these are huge global brands. Okay, this is not just America only. Coca-Cola is like the biggest soft drink brand in the world, and it has a significant percentage in some of the indexes. So it doesn't move that much. Okay, it's not a Tesla, but you can already see we draw two lines. Give me 1 second. Okay, we can see that after just drawing 2 lines, trend line support and resistance, that it's near the resistance zone with a possible double top right before earnings and the price. So if the two prices I'm looking for is support at 56 and support resistance at like a 62 or 65 up here. Long-term picture, long-term. Okay, but I'm not talking about scalping. And then there's little intermediate supports in here. There's like a $60, 56, 57 resistance, 61 and higher. Okay, so just want to watch out for that, Coke. Last one, AstraZeneca. Why am I doing this one? Because in certain countries, they're using the AstraZeneca vaccine as an option, just like Johnson & Johnson. So it would be interesting to see what happens here. We'll just draw some support and resistance. We have support 54, resistance $63, and our resistance just touching, our trend line support is just touching it. Just touching it. So this is slightly different setup. We have the earnings February 10th, and then if it's good, it's trying to, you can see the upside target anywhere 59, 64 right here, like that upside. If it's downside, if it breaks bear, 58 would be our resistance, and then downside to like 50. All right, I kind of went over, but let's go right into crypto. All right. Just want to say I'm streaming live on TradingView, YouTube, and Twitch, and free Discord group as well. So if you want to check out those, if you like the stream, if you're learning something, if you want to follow along or support, and just join a community of people who are trying to actually have profitable trading and investments, go ahead and give us a follow here. Really appreciate it. Then we're going to move over to crypto. Okay, the thing with crypto is, I remember calling, I think it was 2 weeks ago, where I was calling, I did a rapid fire like 20 in a row, and all of them were right here at that spot, somewhere right here. And I was saying it looks like it's going to go up. And then what happens 2 to 4 weeks? It went up. So the TA, sometimes with, what am I saying? Sometimes with swing trading and investing is you have to give it some time. Okay, you have to give it some time. Okay, because I drew this green box here, and even on last week's stream, I was saying, hey, wait a second, Bitcoin looks like it's doing this uptrend thing, right? And it's going to make a higher high, and then that's literally exactly what happened in 7 days. Okay, so TA works. It doesn't work all the time, but it works. And so I was talking to my colleague on Thursday, Friday, saying, hey, I need to long some crypto here because the tech earnings are over. We survived the onslaught of tech earnings. And then, like I was saying, I think I said it exactly. People are going to focus on tech stocks. Once that's over, they're going to come back to crypto. And that's exactly what happened. All right. So now where are we going from here is let's not get too excited about the bounce. Why? Because if we have this setup, what happens almost every single month is it's pulling back down and then it's going to hit that support level and then bounce off of that. Now I want to see if it's textbook, we should get a pullback down. That could also create an upside down head and shoulders for us on a daily. That would inspire some confidence for some investors, traders to come back. So if you look at two scenarios, our bullish scenario, that would actually be 20% to the upside after it pulls back. We might retest 52,000 Bitcoin if this is a true upside down head and shoulders reversal right down here for the bulls. Okay, but if not, let's look at the inverse of that. How could this go wrong? Okay, well, we could pull back, and if we do not break that resistance, it's gonna fade down. So our bottom side target of 30,000 to 25,000 is still in play long term. You could see if you zoom out, it's in a gigantic consolidation pattern to the side. The weekly double top could still actually happen in a super bearish scenario. 1-2 year scenario, it could happen. Could happen. Also, our fake head and shoulders also could happen too. Right? This was scary for some traders for like a week. Wait a second, this drop is negative 50% to the downside. That would destroy the market. But our bulls are saying, no. We're trying to tech earnings over. Let's go. You could just imagine the people in the forums, right? Everyone's screaming, let's go on Bitcoin and altcoins. But before it happens, is you want to see clear levels of support being established. This is not good. If it just goes straight up 20% in one day, it's going to pull back 20% in one day, the next day or something like that. So we need some strong support to hold above 40,000. Now 40,000 is our line in the sand. 40,000, 35, 33, and a 30 on the downside. 1,000. Resistance on the top, 45, 55, 50,000, 55, 60,000. Our top side targets. And then we just analyze the price. Just watch it. Not totally impossible, but it was a little bit sketchy and nerve-wracking for the past month because there's continual downtrend. Bears were in complete control. So bears are sort of half in control right now. Right here, again, it's just like NASDAQ. It's a yellow flag. You could go either way. Could uptrend up, that's nice for bulls. If it pulls back down, nice for bears. Okay. Take a quick look at total. I remember total market cap is the whole whole crypto market index. It hit our 50% Fibonacci, and I drew this risk reward box on last week's stream, I believe. So TA works, okay? TA works if we know how to use it, and we have to get our timing a little bit right. Because if I just draw a random box anywhere on the chart, that's not TA. You know what I mean? You kind of have to time it right and understand what's going on in the market. Okay, we had this bearish downtrend on the whole crypto market, and then tech earnings started happening, financial tech earnings. Then Amazon saved us all, right, on that last Thursday. Yes, Amazon saved us all, and the rally began on Friday, the next day. But this was a consolidation pattern just right here. I remember saying on February 3rd, thinking to myself, all right, I think it's our double bottom and might want to long here. And so that's what happened Thursday, Friday. Okay, but I remember saying on 2 streams, this could be a uptrend reversal spot for the crypto market. Just don't want to get too excited. This is not going to go up forever. It has to pull back at one point in the future, wherever that's going to be, anywhere above 1.65 trillion. So if we miss the long here, we just wait. The problem is when you see a lot of green on your watch list or you open your phone, you see green on crypto, is people just want to automatically jump in. But more than often, they're jumping at the top of the move, relative swing trading. Okay. So if we just rewind 2 weeks ago, there was significantly more fear and uncertainty in the market. Why? There's earnings, crypto's crashing. Remember that crypto day, it was like negative 10 or negative 20% or something like that, something crazy like that happened in crypto. I remember that one day. It must have been this day right here, January 21st. That's some serious fear, uncertainty, doubt in the market, but that's when Warren Buffett says it's time to buy. When there's greed in the market, when there's excitement, euphoria, that's when Warren Buffett basically said to sell. So you can see the psychology of the market at work. Our 4 hours double topping up here, so it could bounce up one more time on the 5-minute 15 in the next day or two. But if you're trying to get value on Bitcoin, it's not here right now as a long. You just have to wait for the next pullback or support level on crypto. Also, I was pointing out on the futures chart that this was our support level on this yellow trend line right here. And that's why I also drew this box. We got 18% profit in, I think, 6 days. 9 days. But I remember exactly saying this could be our support level. Okay, so we get a bounce up. So just watch out for that. If we trust in this and we're not double topping, our super bull target would be a retest of 50,000, 60,000. You could just see it on the charts. If it's going to do that, okay, great. For long bulls, fantastic. But if not, if we lose the bear breakdown here, 40,000 our line in the sand, we lose that, then you can see significant downside. All right. So you'll notice that I'm not putting 15 indicators or on my chart. I drew 2 lines. 2 lines. And then I kept one ear open to what's happening in the other markets globally, because people seem to forget that Bitcoin exists in the same universe as stocks and Forex and indexes and commodities. From a certain point, Bitcoin can be thought of as a commodity. Okay, so hopefully that explained probably a large part of what could happen with crypto. So now it's rapid fire the rest of the altcoins. And then we'll go into some Q&A request time. Might go a little over the stream, it's okay. All right, Ethereum. So what's going on here? We hit our oversold and we bounced off of Ethereum, off the lows. What we want to watch out for is this death cross is really slow. So if the price is going to really reverse, it needs to penetrate those EMAs, the moving averages, up to the upper 4,000s and do that and go up like that. Okay. Very similar. We hit a support level. So again, if someone's trying to long this, it's not the low spot. It's not the low spot right now. Wait for another pullback. And that's the name of the game, the patience game. Binance Coin, again, I'm leaving these green boxes up here because somebody, if they actually bought this, is 12% profit for them. Congratulations. I would sell half if you're swing trading only. ADA Cardano, same deal with Cardano. We bought the low of Cardano on this move, the triangle. I mean, the X marks the spot, the basing. How did I know it's going to be the bottom? It's right here. The support level. I drew this for, I don't know how long this has been here. Okay, and then when it happens, you have to understand as a trader that if you're going to put some risk on, you just do it, right? On a higher probability setup and a strategy and a situation. I am not longing this little candle up here is too high. That's the spot to short. The spot to long was $1. I've been calling this support for such a long time. So now the upside profit potential from the price right now could still be a 15 to 30%, but it's a long way to go. That might take 40 days to happen or something like that. But still in the green on Cardano. Solana, I do not trade Solana because it already went up. It was too, as a trader, it's too extended to the upside. Doge had a nice bounce, very nice. Let's just see if anything didn't go. Wow, Litecoin, wow, this would have been a fantastic long spot because we literally captured the bottom of the move on the wicks. So sometimes if even TradingView wrote an article on this, and I I agree with them. Is sometimes you just put a small limit order just down here in a low support zone and just leave it there. Okay, so what am I talking about? $100, right at $100 psychological. You could have put a small, like 10% of your capital order there with a mental stop loss, and then you would have been up as a trader. So sometimes 30% up, 28% up. Our target was 12%, but it went double the target. So some people are going to start trimming their profit right now on the Litecoin trade. Wow, see Bitcoin Cash right there to our extension 328. I was just this last time I was just saying it's going to go up or down, but you know, it went up. Okay. So you can see here that the resistance from $300, once that's broken, some people take that as a signal. So it's not random. Link, nice. Algo did break out of the triangle, but we broke down first. Wow, Shiba Inu. Remember calling this? I even put an alert right here. Okay, so I'm not bragging about trades right now. I'm explaining how to use TA and TradingView to increase a trader's chance of making profitable trades. So let me explain this particular trade. I set an alert right at the 2008, somewhere in there range. And it's a triangle to measure this. Remember last time saying, oh, Shiba Inu from the breakout might go 11%, and it went 38% profit. And this alert did fire for me at least once. I remember seeing this here, February. Very close. But the box where we went long basically caught the bottom of the move. Fantastic. Love it, right? How do we know how to do that? It's TA. Technical analysis is oversold, double bottom, beautiful trade, trimming that profit. I'm out. So TA works. It was a little dodgy, a little bit sketchy, a little bit shady because of earnings. But once that earnings fear, literally February 3rd, the next Friday, it said, boom, tech earnings is done. Traders looking for, okay, what's going on? Crypto, boom, there's a setup. They initiate that trade and hit the target. But now what I'm concerned about is on the intraday for like a 1 hour, 4 hours on SHIB is that you might see some significant pullback. So if it's going to go high, low, high, it might pull back low, and that might be one last entry if someone's trying to catch the SHIB train for the trade, not for investment. Matic also had a nice little uptrend, not quite as large. But why am I reviewing this? I'm going speed because I've already covered these coins before. Maybe a little breakout, okay, but it's in that overbought area, so that's why I'm not getting excited about long. 2 weeks ago, when we were here in the low area, that's why I kept saying on every single 4 hour chart, maybe somebody might want to buy something educational wise, right? You don't have to I mean, it's 30% profit, just absolutely phenomenal. That's why people love crypto. Atom, I remember calling or pointing this out, double bottom on Atom. That's why we went up. Filecoin, just playing textbook uptrends. VeChain as well. Watch out for this though. A little bit of bearish reversal signals happening on some of these altcoins in the swing trading time frame. So watch out for that. Also, my list is USA list based, so I'm not looking at global coins. Just rapid fire. Waves, I remember I wanted to long waves because I didn't actually long this one, but it's a support level trade. That's what happened. Double bottom. I remember saying this on the stream. Waves looks kind of suspicious. Maker. Triple bottom support. Rally up. Okay, Maker, as an example, if all the altcoins start doing this, it keeps going up, and then we pull back, you might see an uptrend reversal start over again. That would be the second chance for a long to take some risk and get in the trade. If it's going to uptrend, golden cross 4 hour, 1 hour daily, then okay, I'm back in crypto. You got to make a decision before other people, the masses. Okay, but this is not an all-in moment for me, no. It's just a small percentage capital trade if it's going to continue up or not. I'm saying this, if it fails, then okay, fine. Right, small amount of capital lost. In crypto, you could make some gains back if you manage the risk properly. HNT, and so we're getting to some of these baby coins, I like to call it, the smaller market cap coins. I'm not going to talk about this, but I remember saying on OMG there was this upside down, excuse me, there was some upside down head and shoulders right here. Okay, so kind of like Tesla, this is what I'm talking about. This is the picture you want to watch out for on a long side on Tesla. We have the potential 4-hour upside down head and shoulders. And how long did this take? 14 days. So that's why next 1 or 2 weeks for Tesla, you know, that's the exact same pattern that can happen, the 20%, and then just kind of remember this price pattern. So as long, if it's going to be a bull setup, as long as you do not go below the neckline support or any of these three down here, we're fine. Okay, that's how you know how it's going to be real or not. You start establishing some real higher lows here, the right shoulder creation, and then one more higher low up here for the bounce. So crypto trading is not impossible. It's just you need a lot of knowledge and skill and experience. So I just want to take a side note here is if you're just starting off, you do not have to use real money, okay? You can use paper trading here on TradingView. I think you could paper trade with a free account. I don't remember, it's been a long time. But paper trading is available for probably every single account type. You just turn it on and then you just paper trade. And it keeps a log of like the general account profit at loss, and you can practice. You open up the trading window once it's here, and then it's like you're trading on a crypto broker. I love TradingView paper trading because it's a lot easier than an actual exchange. So if you want to learn like how do I do this, how do I trade, or how do I do anything with TradingView and trading, is just practice paper trading, you know, risk-free. No loss of your actual money and cash, and just paper trade USD based cryptos or stocks in the morning, afternoon, 24 hours for crypto, and just practice, right? Get used to it. Understand. I would recommend making mistakes on paper trading rather than losing thousands of dollars and then realizing a trader made a mistake. That's not good to do it that way. Paper trade. Okay, so I was saying one harmony. Okay. I think last week's stream, I was saying I'm really interested in one coin. Why? Because of the triangle setup. The triangle setup and the support. This is such a strong support. 1, 2, 3, 4, 5, 6, 7, 8 times touch points. And then I said, if somebody wants to long this, interesting spot. And then what happened? 25% profit on that particular trade with 10% stop loss, which never even went down. So again, the breakout trade, there's 2 spots to long this right here on the bottom circle, or the breakout here. Last chance maybe right here at 19 cents, but that's more of an intraday entrance. But now this is starting to lose momentum, so it's not the place to long anymore, okay? So this is how on crypto and stocks and TA, there is a certain point in time that it's a good time to buy, and there is a certain point where it's a bad time to buy. For trade. As a long, this is a bad time to buy this as a long for a swing trader or day trader, right? Because it's so overbought. Down here, when there's much more fear and uncertainty and like, oh, are we going to crash down? That's the time to buy. All right. I'm going to just move along here. Zcash in the overbought zone on swing trading. Mana already having its run, but Mana, you can see here, if it's going to golden cross, it needs to pull back first. Maybe one more chance on Mana to long it at 275 range or lower. ICX had the upside down head and shoulders, and it played out perfectly. Just took 2 weeks. Okay, so I leave these past drawings to teach people and to show people this is what you have to do, because if the chart looks like this in time, you're faced with a question. And now we're going to move into the Q&A part. Is how I like to think about the market is it's like you're walking down a street in your city, right? Let's say it's like Wall Street or Crypto Street, crypto world. You're just walking down. Have you ever been in a situation where you're like walking into a grocery store or walking down the street and somebody like tries to sell you something on the street? They ask you, hey, you want to buy this? You want to buy my CD? You want to buy my music? People have offered me that in my city, in my town. Or you want to buy flowers or something right on Valentine's Day? Or they ask you and I say, how much? Right? That's what the stock market, that's what the crypto market is asking you every time you log in and I'm staring at the screen. The market is saying, hey, No FOMO charts. Do you want to buy some ICX at 68 cents? Do you want to buy that at 68 cents? And I have to make a decision. I have to know, is that a good value? Is that a good price? How much is ICX generally worth? How much is Coca-Cola? How much is Tesla worth? Do I want to buy that right now? That's the kind of question. Mr. Market, that's an analogy used all the time. Mr. Market's asking every day, no FOMO charts. What are you going to do today? What are you going to do today? You want to buy some of this stock? You want to buy some of this crypto? You want to sell some of it to me? What do you want to do? You want to hold it? What do you want to do? They have to make decisions like that based upon your analysis and your charts. So at a certain point, there's going to be a time where you'll know the asset well enough where you can calculate it mathematically if you want, financially. But you need to know, is it relatively good price, discount price, or is it not? Because when we go into the store, like if I go into Best Buy to buy some electronics, I know I could get cheaper cables on eBay, right? Similar quality, cheaper cables on Amazon or eBay. I know that just being alive right now, right? And like being in the market and having some experience and knowing that kind of stuff, electronics. It's the same thing. After you analyze and know crypto and stocks for a long time, you'll get a general sense of, is this thing too expensive? Is this thing too high? Or is it low right now? And then if you really want to get into it, you can kind of calculate it for stocks at least. Crypto is much harder. But stocks, you could calculate it. It's called intrinsic value, right? You could generally try to calculate and see, is this stock too high or is it too low, right? And who taught me that? Warren Buffett taught me that. And you want to buy stocks when they crash. Because Mr. Market and a lot of traders, when they have this type of flash crash happen, they are screaming for somebody to buy the stock from them. That's what a stop loss is, right? If you look at some videos, I encourage you, if you're trying to be a trader, I would recommend this. Go on YouTube and look up stock trading PIT, stock trading PIT. Because in the 80s, before computers, that's how people traded. They yelled at each other, screaming, and with pieces of paper, they would trade. And that's the psychology still exists like that in the market of people selling and buying, right? So that's just a very important example for people to realize. We're not pressing buttons on our keyboard. Is you're actually trading with 80% of the time you're trading with the robot against a robot in stocks and crypto, but 20 to 30% you're trading with other people, other humans. So if you just think about it that way, right? Sometimes there's like a Black Friday sale on clothes and commodities and software and stuff like that in the world. You just wait for the sale, wait for a crash, and then you enter a trade. And if there's a pattern, play the pattern, right? Participate in it. And sometimes you'll get a wonderful 25% profit. Sometimes it happens, sometimes it doesn't. I've seen upside down head and shoulders completely fail. It happens. Okay, so that's just some serious education in terms of, if you read books, you'll know what I'm talking about. They talk about that story all the time. If you read books on trading and investing, I probably just combine like 6 authors into one story. All right. So let's move on to some of the requests and some questions. So if you have a question, Q&A, request, I guess I'll go over a little bit today because it's Sunday for me here before I'm off today, and answer some Q&A and some requests. So if you have a question request, type it in the live chat box and we'll cover some of those. We already have a question from our Discord group. Someone actually private messaged me, so let's look at this one. Okay, so somebody asked me in my Discord group, hi, great TA content, love it. I am new to this. I was wondering, how do I actually place orders from chart analysis or strategy? Okay, first question is chart analysis and orders. Like I'm gonna use, let's use ICX. This is just some random thing. So the first thing is, this is TradingView charts. Not every crypto exchange or stock exchange actually is on here. This is more of a crypto and forex based trading connection. Okay, so basically you probably, if you're serious about stocks and crypto, you're probably not going to use TradingView to trade because it cannot connect. But you have to manually do it yourself if you're a human being. So very quickly, with a small percentage of capital, you have to learn the price signals or whatever, the price patterns, I should say, not signals. And then you have to determine your entry into your buy point entry as a long setup. Then you set your stop loss. This is a very large one for crypto. Your stop loss is your exit, emergency exit. You always have to have a stop loss in trading or else you're gambling. Then a profit target on the top. So you have two on your exchange. You're only going to be able to put in one order at a time for crypto generally, unless you're doing OCO triple orders. But for the most part, you're setting a buy. Let me write this out for people. Entry. Okay. Then you have a stop loss. Stop loss at the bottom. And then copy paste, but it's not working. You have your profit target on the trade. Right? And it's 2 to 1. And you're never going all in on trades. That's how people lose all their money. You just, as long as you never go all in, you only risk 1% of your capital. And with total per trade, and you do this and you buy at the right spot with technical analysis, you should be okay. Okay. The problem is people do not do any of that, and they close their eyes and put all their money in and never check the account for 6 months, and then they lose all their money. 90% of traders lose all their money in 1 year. Okay. So you have to manage. This is more for trading. This is the most important thing you'll ever learn is entry, stop loss, profit target, risk management, maximum dollar loss you can have. And then your profit target. And once you hit your profit target, you sell 25, 50, 75, or 100%. And you're just out. You're done. Don't get greedy. Don't become a pig like they say in the market. Okay, so hopefully that answered your question. The strategy part is you have to study a lot more. You study the charts, you study books, and you have to understand, how do I know it's going to be low price and stuff like that. Okay, so that part, that's where you have to kind of like work. That's the hard part of TA. You have to learn it and then work at it. Part 2 of his question is, do I watch the markets all the time and place order on exchanges, or do I set it up in a customized bot, etc., etc.? Okay, so I was telling this person that automated trading, algorithm, customized bots is beyond the scope of what I'm teaching here on TradingView. So there are plenty of resources on that on TradingView, YouTube, and Google if you're into automatic or algorithmic trading. But all I'll say on the first part of that is, do I watch the markets all the time? Personally, I do not. And I manually place orders on my exchanges. So I'm an old school type of person, but I still think that I believe it's the correct way. Why? Because this is the analogy I was thinking of when I saw his question. It's kind of like asking me if I want to start a catering business, a food catering business. Like let's make a automated food factory. Well, first off, what are we actually going to make food-wise, restaurant-wise? Basically, you got to become a cook and chef first. Learn it manually yourself before you can even think about, in my opinion, about making a catering business or automatic, food production business. Okay, because 90 to 95% of traders on whatever they're doing, manual or automated trading, are going to lose some or all their money within 1 to 3 years. That's a statistic you can look up on Google. It's real. The professionals on Wall Street know that. They know that. Okay, so that was his question. All right, next question. Somebody wanted me to check NAS 100 USD. All right, let's do it. NAS 100. Right here, on end. This is basically the NASDAQ 100, if I'm not mistaken. So, if this person's still here, a car geek on TradingView, what I would do is, because I'm swing trading investors, you start long term. Start drawing some support and resistance. Okay. Well, we have our support here at 13,922. Support at 14,487. Our resistance 15,215, 15,603. That correlates with a lot of spots on the left side as well as here. Okay, so support and resistance, you're looking at a lot of price. You cannot set a support off of one touch point. That doesn't make any sense. It's at least 2 touch points. If you study any books, they'll teach you that. So support and resistance. Then you can start drawing some trend lines. So here's one, and it's already broken to the downside. Here's a second one. There's a resistance up here. I'm touching multiple touch points along the way. I've just drawn this so many times. Okay, so you could see that it pulled back down to the third support down here, 1, 2, 3, and then bounced up, but now it's consolidating down into our support level here, bouncing in between here. So again, you might have missed the first part of the stream, but the two scenarios is we're bouncing into a higher high like that, uptrend scenario number 1. Number 2 is consolidation to the side. Number 3 is bear breakdown, or maybe like a really long bull scenario, but it's basically going to hold the support above 14,485 or 13,906. Those are the two levels that professionals are looking at because it's there on the chart. Or experienced advanced traders, that's the two levels that everybody knows. The level here to beat is 15,139. If it beats that, then you might see additional day traders coming here along this up to 16,000. Okay, so I just know from experience that's how people play a market. But you know, our tech earnings are over, etc. You might just want to rewind the stream to the Nasdaq QQQ ETF part. I'm going to say the exact same thing. Okay, so you just want to watch out for those 3 scenarios. Anybody have any more questions or requests? This is your time. Okay, I know there's like 11 people, there's 13 people watching right now live. So this is your time. Any question about TradingView? I'm opening this up. I don't do this all the time. Okay, so this is your time. Take advantage of this right now. Opportunity is if you have a question about TradingView tools or indicators or stock requests or crypto requests, now's your time. I have to wait a little bit because the stream is delayed. Just wait for that. Okay, so if not, then we'll just look at a couple more stocks and we'll close out for today. So what other earnings do we have this week? Well, there's some MJ earnings, so those are volatile. We'll look at some of those. MJ. First, we'll look at the MJ ETF. See what's going on here. If you don't know what MJ is, well, in USA it's marijuana. The stocks are in, I don't know what the exact percentage is. Somebody could quote me on it, but many US states have legalized marijuana. The ethics of that is it's debatable worldwide, but there are stocks to trade. Okay, it's very volatile. I remember when the MJ stocks were very volatile in 2018. 2018 we had the legalization in US for uncertain states, and it was people just losing their minds. Right, but it's been an extreme downtrend for 1 year straight. So why am I excited about this? Is it was at some point like 70 to 80% off discount. That's what I'm talking about, Mr. Market. Mr. Market. I would be more interested in MJ if it goes really low to like 849 or something like that. Because that's literally the pandemic bottom. That's a significant support level way down here. $8, $8.37. That's significant. Is it oversold, MJ? It was. Yes. So again, that's why maybe even this year we might start to get the reversal, and that would be some serious profit, up to 80% profit, like 10, 20, 40, 80% profit. But first, you want to see some evidence, right? You saw this higher low pattern just like NASDAQ before it exploded up. So it's kind of in the beginning formations of that. Probably this year we're going to see something happen. Maybe. So who's reporting earnings? We've got CGC, the big king in the MJ sector. The problem is, though, yes, there's 2 things. The good thing is it's very low from our 2018 high price of 55. I remember that insanity. The 50s of CGC. Then We had a reversal pattern down here, then it bounced up, made a lower high in the weekly, and then basically crashed down to our 0.88 Fibonacci, which is here with the double bottom on the RSI weekly. That's why I'm thinking sometime this year, maybe it might take 2 years, but as an investment, I might be interested in CGC, marijuana company here in the US, because it's so low price relative to 2, 3, 4 years ago. I remember I traded it 4 years ago. It was $55, $50 CGC, and now CGC is $8. This is what I'm talking about. As if you know companies, you know the price history, you live through it, you know what's high price, fair price, and low price in the market. That'll help you in your journey of trading. So what I caution people against is if they look at, if they're a scalper or day trader, is this is not telling, I'm on a 1 minute chart right now. This is not telling you the 4-year history of CGC. You're looking at 1 day of day trading. Okay, we hit the oversold balance. Okay, 6%, which is phenomenal. But, you know, look at 1 day of trading. So I don't scalp, I don't day trade that much anymore. I used to. But, you know, zooming out here, I'm just calling right now, CGC, very low relative price. Okay, we have a question from Rafa06 here on TraderView. What's the best indicators in my opinion? Okay, this question is, I could answer it, but I'm gonna just simplify it. Okay, so I'm gonna call what's like the standard technical analysis package is. Let me get like a let's use a Bitcoin because I know a lot of people are into Bitcoin. I'm just gonna pick a random chart here. Just use Oanda. Okay, so we're on a Bitcoin chart. The first thing we need to understand, I'm gonna try to do this short, is that the price itself is the #1 most important indicator in the world. If you know how to analyze price, patterns, trend, support and resistance, those are the most important indicators that you'll ever find. Just knowing price, right? If you understand the candles, what does green, red mean? What does this mean? Because you need to get so good at candles, for example, like you should be able to call out every single candle. For example, this is a hammer candle. Hammer, doji, shooting star, doji, bullish engulfing, hammer, doji, bearish engulfing. Hammer, doji into a bullish engulfing, and this 3 pattern is a morning star pattern. That's why we're green. Okay, so you have to get that good at understanding candles. You got to memorize them. I spent a lot of time just memorizing them. Okay, so that's how you know price is the most important indicator of all, because all the indicators ever created is calculated mathematically from the price. So all indicators are going to be slower than the actual price itself, analysis, if you can get ahead of it. But the standard indicators that you'll find, and I could say this because it's public information, you just search anywhere and you'll find these. Moving averages. So like moving averages, there's a whole bunch of these types, but basically moving averages. Okay, I'll just use a big one. Moving averages, and then usually people like to use like 1 or 2 of these. I wish there was a duplicate. Is there a duplicate? That'd be a nice feature to have, duplicate indicator. I'm setting this up correctly. I'm not trying to rush things. Right? You get your two moving averages, at least 1 or 2, right? If you study enough technical analysis, you'll understand what it is and why we need those 2. So I'll leave that. That's a different stream. But the oscillators that are most popular are the ones down here, RSI and MACD. Okay, so this is, and the volume is down here. Okay, so this is kind of like a beginner's tutorial to intermediate tutorial of how to set up your TradingView charts. You get your at least 1 or 2 moving averages on the chart, start on a daily chart, and then you get your RSI and your MACD down here. Okay, But what I caution you against, and anybody watching this, is that people think that indicators work 100% of the time, and they do not. Nothing works 100% of the time. And again, when you go on the market, you're not trading the EMA or moving average. You're not trading the RSI. You're trading the price. So that's why the price, if I had to pick only one thing on a desert island on a chart that I could see, I would just pick the price. Nothing else matters to me. Even the volume sometimes doesn't matter. You just turn that off sometimes too, right? I mean, I know a TA association would be screaming at me right now, but right, the price, if I had only pick one thing, it's the price. And then a pencil, because then I can start drawing stuff, right? A pen tool, horizontal tool. The tools actually are more important than the indicators, right? So you could draw horizontal lines. You get your trend lines. That's way more important because you'll discover setups. You have to draw it. And I know people like automated stuff, but in my experience, if you spend 5 minutes on a chart or 10 minutes and manually draw what I just am teaching here, because I'm teaching classic technical analysis, the foundations of technical analysis, is you'll find setups all the time. You just got to put the work into it as a trader if you're serious about it. And then always manage your risk. Okay, I went over 30 minutes, too much over today. So I think it's a good place to stop it right now. Thank you so much for watching, everybody. I'm streaming live on TradingView, YouTube, and Twitch. And I have a free Discord group, which every week I give a free watch list of stock earnings, volatility, economic data, current events, and some support and resistance. People actually pay for that per month, but I'm giving away for free for now. And this Discord is free for now as well. Okay, I'm being totally transparent. I've been saying almost every month that a paid version of the Discord might be released this year. It depends on the situation and the demand for it. And that's in the works, in the behind the scenes. And I just want to thank you, everybody, for tuning in today. Remember, we still have stock earnings for 2 weeks, so the volatility is not over. Let's manage our risk on the downside and just do technical analysis well. Hope everything goes well in your life this week. Thanks so much, and I'll see you next time. Thank you. Bye.